Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Monday, 8th September. Coming up on the show, after Friday's weak jobs report, the focus this week turns to the Fed's other mandate, inflation. Political turmoil in France and Japan will tell you how that's impacting on the markets and how an EV battery plant has sparked a diplomatic row. So grab your coffee and let's own the morning. Well, before we kick off, let's take a look at where futures stand before the opening bell rings. And it's looking like a positive open. In fact, global stocks have rallied today in response to that weak jobs report that we got on Friday. Investors are now setting their sights on inflation data to highlight an otherwise light calendar for the first full trading week in the historically slowest month of the year. On Thursday, economists expect that consumer prices rose 0.3% over the prior month in August and 2.9% over the prior year. That's a slight uptick from July's reading. Now, the next thing you need to know is Apple, and it has its annual marquee event out tomorrow. The biggest news from the show should be Apple's highly anticipated iPhone 17 Air. As my colleague Dan Howley put it, think of it as an iPhone that's been dabbling in Ozempic. Wall Street analysts are expecting a price hike too, though, possibly in the region of an extra $50 to $100. And finally, earnings season may be coming to a close, but there's still a couple of reports to keep you interested. After tomorrow's closing bell, Oracle reports first quarter results, analysts expecting the firm to reveal strong AI demand. It'll also be worth keeping an eye on spending at Oracle. The firm has been shelling out on data centers. Another one to keep an eye out for tomorrow will be the OG meme stock, and that's GameStop. Investors will want to see whether GameStop can maintain profitability amidst the ongoing shift away from physical game sales towards digital and alternative revenue streams. Well, to help us look at some of these things in more detail, I'm joined by Russ Mould, Investment Director at AJ Bell. Russ, fantastic to have you here on Market Sunrise. Well, let's start with your take on Friday's jobs report. It was a pretty weak number, wasn't it?
Yeah, there was no getting away from that, and that tallied with what we saw from the ADP number earlier in the week. And also the JOLTS number, the Job Openings and Labour Turnover Survey, where the number of job vacancies actually undershot the number of unemployed Americans for the first time in about 5 years. So clear signs of some softening in the US economy. We also have to be aware that this is likely to be a kind of lagging indicator, just because of how long it takes companies to go through the process of the unfortunate process of perhaps having to shed staff or just decide indeed not to take them on. So I think there are signs of softness in the US economy. It probably also raises further questions of the quality of the data, given some of the historic revisions that we saw, and for all of the fact that weakness and revisions both enormously annoyed the president in the prior month, those figures may yet still give him what he wants, which is interest rate cuts, and that market's now pricing in 3/4 point cuts by the end of the year from the Fed.
Now, we've got PPI data out and CPI data out this week. They're probably the last data that we get before the Fed makes their decision next week as well. So what are you looking out for?
Well, you'd assume the Fed would get a bit of a sneak peek at those, given how important they are. I think you've already flagged that there is some mild acceleration expected in the consumer price index rate to just under 3%. That would mean there's been no improvement since January. So if the Fed was looking for a reason not to cut interest rates, it would potentially have one because its target is 2%. But there is that sense still that certainly the White House would rather that the central bank played a little bit fast and loose with inflation in the White House's quest for growth, and it'll be intriguing to see whether Chair Powell delivers or not. Again, markets seem pretty convinced that he will.
Yeah, the markets are convinced that we'll get at least a 25 basis point cut next week. But there are people now talking about 50, maybe even 75. What are you thinking?
Yeah, I think looking at this, I can cheat, Ramzan. I can look at the CME FedWatch service, which will do all the hard work for me. And I think there is a small chance seen of a 50 basis point cut at the coming meeting. Treasury Secretary Scott Bessent has been pushing for that. Given that it would require it is requiring a fair degree of fresh policy, fresh data input, and pushing and shoving from the White House to get the Fed to where it may want it to go. I'd be personally surprised by a 50 point cut, but you never can tell.
It's interesting to note that gold is still on the rise today, possibly because people are making more bets that the Fed will cut more aggressively, no?
Well, I think that comes back to the point we've just had a discussion we've had about inflation. With inflation being above target, for the Fed to be aggressively cutting rates could be seen as playing with fire, very definitely. And so that I think is probably playing to the narrative that gold bugs have been pushing for some time, that America has got a debt problem, a federal debt problem. One way out of that is to try and inflate it away, or another way is to try and get nominal growth to run really, really hot, which I think you could argue is the Trump agenda. Lower personal taxes, lower interest rates, lower oil prices, lower dollar, less regulation. But that does again play to the gold bugs theory that either there's inflation coming or there's very rapid growth coming, which could lead to inflation, and therefore you need some sort of store of value on your side. Hence the argument for gold.
All right, let's move on to some company news now. We've got the big event tomorrow from Apple. I'd mentioned the iPhone 17 Air, as Dan Howley put it, an iPhone on Ozempic. What do you want to hear, though, from this event tomorrow?
Well, I mean, ore-dropping, I think, is the way that Apple is trailering this event, and it seems to be very, very hardware-focused, whether it's iPhone 17, Air 17, new functionality on the watch, new functionality on the AirPods, but it is hardware, and Apple is looking to sort of recapture some of the face lost from the delay in the AI-powered upgrade to Siri that have slipped to next year. So yes, I'm sure Appleholics will be very excited to see what hardware products are coming, but the market's going to be just as intrigued to see, want to know what's coming further down the pipe in terms of AI. But also, I'm sure Apple will be laying the groundwork for what I'm told could be a foldable iPhone in 2026, and then in 2027, the 20th anniversary of the iPhone. But again, that in itself is a clue. Apple is still very heavily reliant on a 20-year-old product, and I'm sure there will be some people out there looking for more innovation going down the road.
How disappointed have you been that we've not heard more on the AI front from Apple then?
I mean, the shares are down 4% this year, which I think rank at about 300 and something within the S&P 500. So I have to express any opinion. The market's already telling you what it thinks, which it is concerned that Apple is starting to lag behind. We know it has a fantastic franchise. We know it has sticky, loyal customers. We know it's able to monetize those through services and some of the walled garden ecosystem, even if regulatory pressure there is not going away. But I'm sure, yes, at some stage, given that Apple is spending barely 5% of its sales on capital investment and most of its rivals are spending 15 to 20% or more, there may be certainly questions asked as to what it's looking to do to catch up.
And Russ, very, very quickly, earnings season coming to an end, but what have you made of it so far?
So far, so good. It certainly hasn't done anything to upset the market. We've seen specific companies warn about tariff hits, whether it's been Lululemon Athletica or Caterpillar. But overall, it seems at the moment as if companies seem to be eating those costs rather than passing them on. The big question in the coming quarters is what happens to inflation, what happens to earnings if they do indeed start to pass those on to consumers and corporate customers.
Russ Moll, great to have you here on Market Sunrise. Russ Moll there from AJ Bell. Many thanks. South Korea's biggest firms are rushing to contain the fallout from a sweeping US immigration raid at a Hyundai Motor LG Energy Solution battery venture in Georgia that sparked concerns over billions of dollars in planned investments. The ICE operation was part of a broader US crackdown on undocumented workers and came less than 2 weeks after South Korea's President Lee Jae-myung and Donald Trump held a summit to underscore their alliance. They touted a trade pact that includes a $350 billion fund to help South Korean firms expand in the US. South Korean firms separately pledged $150 billion in direct US investment in an effort to boost trade ties between the nations. But the sweeping immigration action is making some companies cautious. According to the Korea Economic Daily, LG Energy has tentatively decided to postpone the start of its EV battery plant with Hyundai in Georgia, while Hyundai has banned all US trips by its staff. Okay, next up we focus on Japan, where the Prime Minister Shigeru Ishiba has resigned over the weekend. Japanese stocks, though, rose and the yen weakened in response to the news today. Japanese bonds, though, continued their sell-off as well. Investors are clearly believing that a new administration will implement measures that will boost growth. And finally, we turn to Europe and France. Prime Minister François Barrou's government will likely fall later today. His government has been trying to chip away at France's massive debt load. Bayrou will face a confidence motion in France's lower house, a vote he called in a bid to pressure lawmakers to back his budget proposals. His plan, though, may have backfired, and opposition parties in the National Assembly have mobilised against Bayrou's minority government. Time for our first break now. We'll be back with some intelligence on Nvidia. See you shortly. Well, let's take a moment now to talk about the AI arms race and specifically AI chips. Before we dive into Nvidia, I want to give one headline out of Europe where two AI giants are coming together in a big partnership. ASML, the specialised supplier of chip-making equipment, has now become the top shareholder in Mistral, the French artificial intelligence startup that aims to compete with the likes of OpenAI. The ASML stock seems to be reacting positively. Reuters is reporting that ASML invested about $1.5 billion in Mistral's AI's latest funding round. Now, on to Nvidia. We saw at the end of last week that Broadcom rose after news broke that it was teaming up with OpenAI to build AI chips. The move was widely seen as a sign that big firms like OpenAI are looking to become less dependent on Nvidia. And suddenly, Broadcom has been seen as a potential competitor in a chip market that Nvidia is clearly dominating. And in the past few days, Nvidia's stock has been suffering. So, are Broadcom's new chip plans a threat for Nvidia? Well, the first thing you need to know is that there are different types of chips. Here we're talking mostly about GPUs, which are Nvidia's forte, and ASICs, which are Broadcom typically makes. And while they don't really make the same chips, both companies might be vying for the same AI investment dollars. Stacey Ragson, Bernstein Managing Director and Senior Analyst, explained to Jared Blickery what that means for your trade.
I think the question of who's winning or losing, the kind of ASIC versus GPU debate has been going on for a long time. I kind of feel like it's still the wrong question. To me, the right question is more, is the opportunity in front of us still large or is it not? Because I don't think that this market is mature yet. And if the opportunity is still large, I think that there's still plenty of room for both ASICs and GPUs to grow and the pie's getting bigger. If the opportunity is not big, then they're both screwed, right? So I think that's the more appropriate question to ask. I actually do think that the opportunity in front of us is still large. I think that we are still early in this AI infrastructure build out. And so I'm still like positive in general on the AI silicon and infrastructure space.
Stacey Ragson talking to my colleague Jared Blickery there. So now let's go deeper into how Nvidia makes money. Jared Blickery explains in his latest episode of Stocks in Translation.
It's an AI-dominated world now, and Nvidia's chips are leading the way, yet most people still know the company for its gaming chips. On today's Stocks in Translation, we're going to show you how the money engine at the world's largest company by market cap has shifted and why it matters for investors. First, a quick visual on Nvidia's data center, which is basically its AI business versus its gaming business. First, let's focus on the left, which covers the data center. It's a warehouse of network servers that run apps and AI, and its products are AI chips and systems for the cloud. Who's buying them? Amazon, Microsoft, Google, plus other large tech companies. They're scooping them up so they can offer AI services for businesses and even to the public sometimes at scale. On the right side, we have gaming. Think GeForce PC graphics and Nintendo console chips. And everyone from PC gamers to PC makers, both retail and online, are still paying up for these premium graphics chips. Fueling the buying spree are big game releases and new launches of the gaming chips themselves. And now let's show how big each of these two markets really are, as of Nvidia's last quarter ending in late July. That top bar here shows Nvidia's revenue or sales for its data center business, $41 to $42 billion. And you're going to quickly notice how much smaller that bar underneath is, just $4 billion. That's the gaming business, which is only a tenth of the AI business, not a subtle difference at all. And how did we get here? AI native companies, those built around AI from day one, they are scaling real revenue exponentially. Listen to Jensen tell it.
If you look at the AI native companies, last year they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion, tenfold increase in 1 year.
Now let's take another look at data center sales versus gaming, but over time, going back to 2014. Notice how both lines track each other for years until data center in white suddenly rockets higher while gaming continues on roughly sideways. And by the way, those two lines go from solid to dotted at the right side of the chart, which represents estimates of future sales. What's clear is the gap between the two segments is only expected to grow wider as the pace of data center growth holds steady. And a quick aside, that's probably the number one risk to this stock, if data center growth slows down instead of keeping at its current pace. And here's the twist. AI is also boosting Nvidia's gaming segment, and let's listen to Jensen again.
And now what's amazing is AI is coming back to revolutionize GeForce for gaming. And this last quarter, I think we had a record quarter for gaming between GeForce and Nintendo Switch.
Think of Nvidia as AI infrastructure first and gaming second. And the feedback loop from AI makes gaming that much better. For investors, that means the biggest driver is still the data center engine, while gaming benefits from new GPUs and also hit titles. Now here's what to watch next for investors. For the data center, you got to keep tabs on the industry-wide spend on cloud AI, as well as a backlog. That's in addition to AI chip shipments and supply trying to keep up with that demand. And under gaming, watch out for new hit game releases, along with new gaming chip launches, along with pricing. If cloud budgets keep expanding and shipments stay on schedule, the data center story has room to run. And if rivals press on price or if supply gets tight, watch those margins in Nvidia. So in gaming, a strong holiday lineup or a new GPU cycle could easily give the franchise an extra lift. And bottom line, Nvidia's reputation was built on gaming, but the story today is the AI factory. The charts show it, the orders confirm it, and the roadmap extends it. Tune into episodes of Stocks in Translation podcast for more jargon-busting deep dives. New episodes on Tuesdays and Thursdays on Yahoo Finance's websites or wherever you find your podcasts.
Time again for another break, but stick with us because we'll have trending tickers later. Time for trending tickers, and first up, Robinhood. The trading app will join the S&P 500 on September 22nd, and markets reacted positively to the announcement. The stock is up more than 8% in pre-market this morning, approaching the over $109 mark now. That's a big moment for Robinhood and typically means billions of dollars in passive fund inflows as ETFs tracking the index are mechanically buying in, not to mention institutional investors who usually see these indexes as a gauge of credibility and financial stability for a stock. The move cements Robinhood's place in the US financial mainstream. Robinhood shares have more than doubled this year, giving the company a market capitalization of roughly $91.5 billion. The ticker Hood is set to replace the casino operator Caesar Entertainment in the S&P 500. The trading app has come a long way since it promised to democratize stock investing by eliminating commissions. Notably, it's been powering the rise of many meme stocks like Opendoor and GameStop, which we've been covering here on Yahoo Finance. Okay, let's talk about one of the world's largest AI stocks, and it's not in the United States. Alibaba, often called China's Amazon, is back on the radar for many American investors. Alibaba is trending after a strong session in Hong Kong. Shares closed up more than 4%, bringing its market cap to an impressive $2.6 trillion plus, just as the company released its biggest artificial intelligence model to date. Just to put things in perspective, Alibaba is still far from where it was a few years ago, but now it's coming back. It's been boosted by Chinese investors who have poured over $1.7 billion into Alibaba last week, according to Bloomberg. That comes on top of the triple-digit growth in AI-related cloud revenue last quarter. US-listed shares are following suit this morning, trading more than 3% higher in the pre-market, as you can see. And finally, again this morning, Tesla is in the spotlight, and it's not hard to see why. Friday's filing from Tesla revealed the board is considering a $1 trillion pay package for Elon Musk. To get that staggering paycheck, the Tesla CEO would have to meet ambitious targets, including an $8.5 trillion valuation for the company. The plan has sparked a heated debate over corporate governance and leadership values, but investors seem unfazed for now. Tesla is up around over 1% in pre-market trading, building on Friday's gains. In fact, even if car sales have plummeted around the world, Tesla is up more than 25% in the last 6 months, and that's vastly based on Elon Musk's promise that the real money makers for Tesla will be its humanoid robots called Optimus and not cars. Still, many analysts are skeptical about how realistic it might be to offer such a massive pay package for Elon Musk. Gautam Mukunda from Yale School of Management spoke to my colleague Josh Lipton on Friday.
So someday, Josh, I or one of my successors at business school is going to teach a case study about this board, and we're going to walk up in front of our class and just put our head in our hands and say, "I have no idea. This doesn't." Let's put this in a little bit in perspective. To hit all of these targets, to become the $1 trillion man, as you said, Elon would have to increase the value of Tesla by a factor of a little bit over 8. He already has $140 billion in equity in Tesla. That's independent of this package, plus, of course, his holdings in SpaceX and things like that. So if the board did not give him a single other share, by hitting these targets, he would become a trillionaire anyways. So the logic is not, oh, we need to give him this to motivate him and keep him focused. The logic is that $1 trillion is not enough to keep him motivated and focused, and we have to give him a second $1 trillion to get him to this. These are numbers. You said these are astronomical. They're actually not astronomical numbers because astronomy doesn't deal with numbers this large very often. $1 trillion is way more than the number of stars in the Milky Way galaxy. So these are numbers that I think the message I would really take away from this is that the board understands that Tesla's most important product is not cars or self-driving cars or even Optimus. Tesla's most important product is the legend of Elon Musk. And to get into this, you have to believe that Elon Musk can work magic, right? And look, he has. You're not crazy if you say the guy who took the price of putting something into low Earth orbit down by 90% might be able to work other technological miracles. That's not a crazy thing to say, but it is what you have to believe.
Okay, before we go, let's have a look at where the market stands. And unusually, we start with oil. It's clawed back some of last week's losses after OPEC Plus agreed to raise production at a modest rate and against a backdrop of doubts about how many of its members can keep lifting output. Sticking with commodities and gold prices, they continue to rise as those Fed rate cut bets intensify. Let's have a quick look onto Asian markets now. I talked about Japan earlier, but there's also that Chinese export data that came out this morning as well, which showed that shipments to the US plunged 33% in August and that overall exports growth hit a 6-month low. But markets reacting pretty positively in the main. A very quick look at Europe now, and they started the new trading week on a positive note as markets focus now turns to France's imminent confidence vote due to take place later in the session. And finally, US stock futures are drifting higher as investors set their sights on inflation data later this week. Also, watch out for Klarna's IPO. It's its second attempt to go public. The Swedish fintech could be valued at, get this, $14 billion. Okay, that's it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join me on Market Open on Morning Brief. I'm Ramzan Karmali. Go own the morning.